Welcome everybody to our sixth AVE. Good evening to all. Tonight's AVE is sponsored by SAFE. It's our accounting and finance group. A lot of great information here tonight. Sitting in for Aldo Cardona, which couldn't make it tonight, will be my friend from the class of 1986, proud class of 1986, Emilio Rangel. He'll be guiding our panel, which is four individuals that will hopefully shed some light on a lot of questions you may have. A couple housekeeping information. If you don't mind being on mute, we are going to mute you, but if you don't mind, if you're not on mute, please stay on mute. Also, you can direct questions to Emilio, the moderator, or myself. When you go to the chat and you see that you can select where to send it to, you can send it to Emilio Rangel. That way he gets them directly, and you can do that as well. Very excited to announce that we will be live on Facebook. We will be streaming live on Facebook. So if you hear of anybody that can't get on, they will be able to see us on Facebook on our Belen Alumni Facebook page, we're very excited about that. So with that said, I'm going to turn it over to Emilio Rangel, and thank you all for coming and enjoy. Emilio.
Thank you to everyone for joining. Welcome to our AVE event brought to you by SAFE. I think it would be good for all of us to start with a little opening prayer. So why don't you join me in our Father? If we could all, our Father, who art in heaven, hallowed be thy name. Thy kingdom come, thy will be done on earth as it is in heaven. Give us this day our daily bread, and forgive us our trespasses, as we forgive those who trespass against us. And lead us not into temptation, but deliver us from evil. Amen. As we always do, Our Lady of Belen, pray for us. I wanted to introduce our panel tonight. We have some very distinguished people joining us today. We've got José E Cueto and Carlos Perez-Abreu from the class of 1988 and Jorge Saladrigas from the class of 1999. Jose, I would ask you to please join us, talk a little bit about yourself and introduce yourself, and then we'll go on from there.
Thanks for having me tonight. Jose Cueto, I'm Belen class of 1988. I'm currently the president and CEO of International Finance Bank. We're about an $850 million full service commercial bank. We've been very involved in this PPP program. I think it's gonna be one of the subjects of conversation tonight. Been in banking about 30 years, and that's pretty much it.
Okay, thanks. Jorge, why don't you go ahead and introduce yourself to everyone? I'm sure most people know you, but Jorge Saladrigas.
I don't know about that, but I do see, which was sorry, just because I saw the name, so I have to bring it out and give a shout out to George Santamarina there, who was a neighbor of mine for a very long time, and I haven't seen him in many years. But anyway, George Saladrigas, class of 99. Our company is Regis HR Group. We are what's called a PEO, Professional Employer Organization. We provide services in HR, payroll, benefits, and then primarily on the human resources side. In this specific situation, with everything going on with COVID, is really where we've provided the most value to our clients. To that end, I'd like to introduce Mabel Duran, who's on here with me. Mabel, if you'll just give a little wave there. Mabel is a PHR. She's been with us for 7 years there. Mabel really is going to provide a lot more value than I am. And like I told all these guys earlier, I trust her advice a whole lot more than my own. So when it comes to HR questions and everything else that might be going on, I think Mabel will provide a lot of value here. Thank you for having us, and I appreciate it. And hopefully we can help each other out.
Okay. Although I'm not actually a panelist on this today, I'm with Financial Advisor of Prudential Securities. Nothing to do with the subject, just sitting here in a moderating role. Let me introduce our last panelist, Carlos Perez-Abreu. Please take it away.
Thanks, Emilio. As Emilio said earlier, distinguished class of 88, founding partner of Perez-Abreu, Rebates, Cueto, and Torres. More easily said as past PL. We've made it easier for everybody to do it. Full service accounting firm in Coral Gables, about 60 people. With that being said and all the introductions taken care of, I want to first put a disclaimer out there in terms of saying that this is mostly for information purposes. Everyone's situation, every company's situation, every individual's situation is going to be unique. And all of us here on the panel ask you to please check with counsel or your accountants or what have you as you go about going through this process in any way. Now, I know a lot of the things have been changing. As a matter of fact, yesterday alone, we had a change in the bill that was just approved by the House last week and the Senate yesterday. So I prepared for the meeting not knowing that the Senate was going to so quickly pass that yesterday, but I kind of read up on everything that's been going there as well when it comes to the PPP loan, which I think is going to be what we're going to talk most about. Since the PPP loan, though, has taken up most of the conversation since the Families First Act and the CARES Act came about, I wanted to just touch on a couple of tax things that also, were addressed during these acts and during these laws that were passed. First of all, as most of you know, the tax filing deadline from April 15th was extended to July 15th. And that's not only just your personal returns, but corporate returns, and any return that was due between April 15th and July 15th was basically extended to July 15th. You'll still have the option to move on to October 15th if it's so necessary. But I wanted to bring that out. Estimated payments, for those of you that are making estimated payments for 2020, were also both extended to July 15th. So your April 15th payment and your June 15th payment will both be due July 15th. The stimulus tax rebates that were part of the $1,200 that each individual got, depending on your income levels, obviously there were thresholds that would lower that amount or remove it completely, and $500 for the qualifying child. These are advances on the 2020 tax credit that will be reduced by what you receive when you file your 2020 return. There were payroll tax credits for sick time and paid family leave allowed under the acts. I'm going to move it over now to George and Mabel maybe to talk about the FEMLA and the changes that they made there in terms of what is required time, and then the fact that the company can get whatever they pay under those acts, under those leave acts, to be reimbursed through payroll tax credits. George?
Yeah, and actually, as I had mentioned, I'll let Mabel kind of touch on this more. I will say that we did have a client, actually probably a couple of them over the last week alone, where they've had a positive COVID test in their office or in their workplace. And, the questions are, what do we do? How do we handle this? Do we send everybody home? All those kinds of questions that get brought up by a situation like this. Do we have to shut down? Do we have to close our doors, etc.? So I'll let Mabel go ahead and talk more about the credits and everything else, but how our clients in specific have handled these situations.
So thank you, George. Thanks so much, everybody. I'm not a Belen graduate, so I wouldn't even talk about when I graduated because I think I'm older than all of you on the panel. So, but yes, the Family First Coronavirus Response Act passed, and it was effective April 1st. So for all employers that have under 500 employees, this applies, and this will go through the end of this year, at least until now. I know all these things are moving targets and they change, but up until now, this is effective up until December 30th of this year. So if an employer, currently, if they have an employee that falls under, I don't know if you've seen the poster, but there's 5 or 6 things that an employee can fall under the COVID-19: sick leave, taking care of a dependent that may be sick, or they need extended leave because the school is closed or the summer camp is closed. These things are going to apply under those particular scenarios where you have to provide up to 80 hours of sick leave for an employee, or if it's extended leave up to 12 weeks because they need to stay home with the child because the school is closed or the summer camp is closed under COVID-19. That's the key. If it's just everything is open, but the child wants to stay home, that would not apply. It's got to fall under those reasons under COVID-19. So in a case where it does fall under COVID-19 and the leave is taken, up to 80 hours of sick paid leave is provided, part of the whole under the CARES Act is to provide the employer tax credits. So we understand a lot of employers may not even offer sick time or personal time, PTO. So when an employer provides this sick leave, they pay it to the employee at the time when they're processing payroll. They pay the employee depending on, there's either full payment, 100% of what they earn, up to a cap. And then if it's for taking care of a dependent or extended leave because the school is closed, etc., then it's only 2/3 of their pay. And again, there's a cap on that also. There's caps on these amounts. It's not that you're going to pay 2/3 forever. There's a cap on these amounts. So when that happens and the employee is paid through payroll, right away, in our case, we pay the employee and we give a tax credit right back to the employer. Right at the same time on their invoice, they will see the tax credit process at the same time. Questions on that? Because I want to make sure I'm not going too much or too far, and then, you know, it creates a bit of confusion. Are we good so far? Questions?
That's fine. Just out of curiosity, do you know, because I think I've read on this, but you probably know the answer better than I do, if the payroll tax credits exceed the amount of payroll taxes being paid in during a period, isn't there a way to also just apply for a, and it may not be under this Family Leave Act, it may be under one of the other retention credits or something that they're offering, that there's a way that the company can actually apply for that money to be reimbursed?
Yes, I believe there is. I don't know all the details, but I believe there is. There's an application through the IRS, an app that they have to complete. And yes, I believe there is.
Okay. Anything else there on the family leave or on any of the sick leave that you want to talk about?
I just want to make sure those are the general guidelines, unless people have more additional detailed questions, but that's the general guideline.
Okay. Thank you. Thank you very much.
You're welcome.
Another thing, the deferral of employment taxes. So part of the any employer portion of payroll taxes that were due from March 27, 2020 through December 31st, 2020 can be deferred or deferred. Half will be due on December 31st, 2021, and the other half will be due on December 31st, 2022. An interesting thing to note that changed because of yesterday's passage in the Senate is that prior to this new bill, if you were a recipient of a PPP loan, you were not allowed to apply for this deferral of the payroll credits. However, the new bill in Congress, both the House and the Senate, are eliminating that provision and will allow PPP recipients to defer those payroll taxes, even if they receive the PPP loan.
And
So,
Carlos, if I could interrupt real quick, just as a suggestion, and I'm sure Jose may have dealt quite a bit with this as well. One of the things we've recommended to all of our clients who have applied for and received a PPP loan is twofold. One, opening a separate bank account with which to place the monies from the PPP so that it is easier to track how exactly you're spending that money, as opposed to kind of getting it deposited into your overall, business account. Open a separate bank account specifically for these PPP loans. And then secondly, whoever your payroll provider might be, a lot of payroll providers are providing pay codes specifically for PPP situations, whether it's COVID sick leave or whatever it might be. So make sure you take advantage of those pay codes that will help you track the usage of that money at the end of the year if you have to prove how you spent that money.
thanks, George. So that's something that changed for the deferral. I know people have been asking me about that, and I always kept saying if you did PPP, you can't do it, but now I think you're going to be able to if you're going to need to. Okay, so retirement and retirement plans. If you have COVID-related reasons, and that's either you contracted it, you lost your job as a result of it, you had a family member, you're going to be able to take a distribution from your plan of up to $100,000 and not pay the 10% penalty if you're under the age of 59 and a half. Again, but only if you qualify under the rules. You will have to issue a certification to your employer that you qualify under the rules, and then you'll be able to take that up to 100,000. Loans, participant loans from like a 401k plan are also going to be increased to a maximum of 100,000 from the current maximum of 50,000. But again, only for COVID-related reasons. You just can't all of a sudden say, I want to take out another 50 grand from my 401k and take it out. You actually have to qualify. The repayments of those loans can also be delayed for up to a year after you take it out. Going back to the distribution of the 100,000, if you take that out for COVID-related reasons, you're going to be allowed 3 years to pay that back and not have to pay tax on the income. And any amount that you do not pay back, you will then be taxed on without the 10% penalty and be given 3 years to pay that tax as well. How they're going to implement that, keep track of all that, is a question I think that will be answered in another day when the retirement plans figure this out. But those are the things there on the retirement and retirement plan. Finally, for those of you that either are in that stage or have parents in that stage or approaching that stage, all required minimum distributions for 2020 have been suspended. So to the extent that you don't need the money or your parents don't need the money to take out their RMDs, it is one way to reduce their income or their taxable income, and they will not have to take out any RMDs. If they already did so, there's a certain period where you can pay it back and not have to take it out, but that might have already passed. But if there's anyone that still hasn't taken it, or they take it on a monthly basis and they don't need the money, you may want to advise them to stop taking it if they can afford to lower their income and hopefully lower their tax liability for 2020. Charitable contributions, as you all know, starting with 2018, it became much harder to itemize deductions. They've implemented a $300 above the line charitable contribution deduction for 2020. So even if you don't itemize because of the higher standard deduction, you will be able to take a charitable contribution deduction of up to $300. For businesses and personal, the Tax Act of 2017 also limited net operating losses generated to 80%. And you would have to pay tax on 20% of that, you couldn't use 100% of the NOL in years 2018 and after, and they had to be carried forward, they couldn't be carried back. The current legislation now changed that you can go back and take up to 100% of the NOL, and you can actually use the NOL and go back. So if you generated an NOL in 2018, 2019, or 2020, you are actually going to be allowed to carry back 5 years and not be required to carry forward. Only carry forward, which is one of the changes of the Tax Jobs and Cuts Act of 2017. And then finally, some quick ones: interest expense limitation. For those of you that have interest expense that was more than 30% of net income, you were limited on the interest expense deduction that you can take on your corporate tax return. That's now been increased to 50%. Qualified improvement property, 15-year property, is going to be able to be expensed immediately where it wasn't able to. And excess business losses, where there was a limitation of 250 and 500 for joint, is going to be the new business loss deductions. It will not apply for 2018, 19, and 20. So those are changes that they just did temporarily, and then 2021 they will revert back to the previous legislation, which is the TJCA of 2017. I'm going to stop there. That's basically the tax area, and I don't know if Emilio or Carlos or anybody has seen any questions come through on this.
I've got a question from one of our participants here is asking, how are new hires treated in terms of credits and deferments?
New hires, if you're paying them and they, for whatever reason, have the COVID reasons that Mabel alluded to earlier to be getting a credit, you'd be able to get a credit like any other employee, I would imagine. If you're paying them payroll, you're going to be able to defer the employer portion of the payroll taxes. Just because they got hired after this whole thing happened, you're still paying employer taxes on them, and you're going to be able to defer them if it's payroll taxes incurred between the dates of March 27th and December 31st. I believe, Mabel, I don't know if that's...
Yeah, I was going to say, for the regular sick leave, it's if they're an employee, there's no waiting period. If they are going to be applying for the extended up to 12 weeks of extended leave because schools are closed or camp is closed, they just have to be on the books, be an employee with you for 30 days. For the extended leave, they just have to be on the books for 30 days.
Thank you.
The other thing that might be worth pointing out, Carlos, since we're talking about employees and full-time employees, is, and you may have mentioned this earlier, so sorry if I'm being repetitive, but with the Paycheck Protection and Flexibility Act that passed last night, one of the things they did was that if you've had a situation where you're having a hard time having employees come back to work because they're collecting more on unemployment or whatever it might be, you are no longer being, that's no longer being held against you. A lot of, especially anybody in hospitality or restaurants where they can only open at 50%, a lot of their employees are not coming back. And until that unemployment benefit expires, they're going to have an extremely hard time getting those employees back. Before the act that passed last night, that was counting against you, and part of your loan may not have been forgivable. Now that is going to be forgivable if you can show proof, and this is where it's very important to document any contact you've made with an employee where you've offered them to return to work, that needs to be documented so that that money can be forgivable.
Also, may I say, now that you're mentioning the not returning to work, also of an employee. So let's say an employee right now is under unemployment and you tell them we're back to work, please get back to work, I'm offering you the job. And now the employee says, no, thank you, because I make more money, or I just don't want to go back to work. Whatever the reason is, you want to document it, but you also want to report it, because there is something with the unemployment that they're getting unemployment right now because they're unemployed. The minute you do offer the employment back to the employee now chooses to say, I do not want to work for you for whatever the reason is. Now it turns into more of a resignation. And we do have to advise unemployment, hey, I did offer the job, the employee didn't want it, now that employee may be out of a job and out of unemployment. So you want to keep all these things, kind of coming together.
Do we know if the $400 and something federal supplement for going back to work is something that was included in the new legislation?
I don't know. I think most of the new legislation was all PPP related, and I don't think it addressed anything regarding unemployment, but I don't know for sure.
Yeah, I haven't seen anything either. I don't know if anything has been updated on that.
Well, I've got another question that someone's posting online. How does a reduction in force affect calculation of forgivable amount?
Oh, okay, we're going to get to that next. I mean, so that's PPP related, and that's going to be the next topic that we're going to get into. So we'll hopefully answer that question over the next, I guess, whatever half hour that we got left, more or less, of this, give or take. And one thing too, Mabel, on what you mentioned, I believe what George was talking about in the offering someone to work and not being hit for it in terms of a full-time equivalent reduction because they did not agree to come back on the job. I believe one of the thresholds, or one of the things you have to prove, is that you notified unemployment 30 days after you offered that job. So you got to be cognizant of the fact that if you're going to have people that are saying no to full-time jobs that are being offered, that you do notify, as Mabel indicated, your unemployment division that you offered it, and within 30 days of that being turned down is when you got to do it, or that full-time equivalent that did not come back may hurt you in your PPP loan forgiveness calculation.
Yeah, important. Thank you.
Okay, so now as our luck would have it, everybody knows we've talked about it a little bit. The Senate ended up passing the House bill last night unanimously. It had to be unanimous for those for those that are in politics, because they were not in session, and it was the only way to pass the bill, and they were able to do it. The presentation I prepared for and that we prepared for was obviously based on current guidance. The president, as far as I know, has not signed this into law. So what we're going to be going through is basically what was in effect, or what is still currently in effect. If someone were to apply for forgiveness today, I think they would still have to fall under the old rules. However, the major changes obviously are the covered period, was extended, is going to be extended from 8 weeks after loan date to 24 weeks after loan date. Payroll costs that used to have to be at least 75% of the forgivable amount is going to be lowered to 60% of the forgivable amount. There's more clarification, as we just talked about, restoring workforce requirement for businesses that have not been able to restore due to COVID restrictions. That any new loan given under the new law will be a 5-year loan in terms of repayment instead of 2. Existing loans, so if you already got your loan, and Jose, maybe here you want to make sure that I'm not misspeaking, but any existing loan that already exists can be extended to 5 years under the new law, but only upon agreement of the lender and the borrower. So, you're not automatically going to be given 5 years. It has to be something you have to agree with your lender on. Jose?
Yeah, that's correct. The lender has to agree and, be in alignment with the borrower's request. I think that's going to be a contentious point, to be honest with you. I think banks don't have any interest in holding these loans for an extended period of time. I think our objective is to, try to get as many loans forgiven as possible within the context of the SBA guidance that's being provided. But yes, your interpretation is correct, Carlos.
Okay. And then finally, they did make clear, the Senate did, when they passed yesterday through a letter in the congressional record, saying basically that the PPP loan program still does end on June 30th. They are not extending the funding past June 30th. It is just going to be the period and covered period and extended period that we'll get into shortly that is being extended for 24 weeks, which is going to be for a lot of people, whoever gets the loan on June 30th, it will be December 31st.
Carlos, did you mention the change in the 80 and the 80-20 or the 75-20?
Yeah.
Okay, got it. Sorry.
The costs go down to 60%.
Right, exactly.
You know, at this point, I think everybody that was going to apply for the PPP loan basically, you know, got it or is in the process of getting it. So, you know, we're going to concentrate here more on the forgiveness part, but I'm going to, you know, some people actually return the money, which is where I'm going to now turn to Jose as well. So, I mean, after the first round of financing, everybody that, you know, just listens to the news a little bit understood that all the big, you know, companies, big restaurant chains, the Lakers, you know, received PPP money as an example. And then there was a lot of clarification sent out by the SBA and by Treasury about who should really be applying for this loan. And Jose, I'm wondering how many of your clients reached out and started either returning money or asking questions, or what did the bank do in terms of making sure that the people that were applying for the money were qualified?
You know, with the first round of funding, you know, the money ran out really, really fast. So we started to really see post Shake Shack and some of the corporations that took money, certainly a lot more sensitivity from the borrower and a lot more questions. And during this second round of funding, we had a lot of clients pull out voluntarily, given the established criteria. You know, oftentimes we're not the ones giving advice. I mean, we interpret, you know, the requirements of the program, and oftentimes we'll refer them to have deeper conversations about, you know, whether their company really does qualify or it merits, you know, consideration for the PPP program. But a much more awareness, you know, and also I think the enhanced scrutiny that became part of the SBA guidance of loans of a certain size also opened up the eyes of borrowers into ensuring that they truly qualified and that there was real economic, you know, need for the loan. So, I mean, certainly in the second round, there was a lot more of that, Carlos.
Jose, I wanted to ask you, with the rush for SBA and PPP in the beginning, was it a challenge to filter out existing clients to potentially new clients that might have been having difficulties at other banks? Did you see that?
That's a really good question. From day one, we said as a bank that we're going to take anybody who needs help. I think it was mentioned earlier in the conversation, the only requirement that we put on the table was that they open an account, and really not so much for any other purpose than to segregate the expenses so that they could utilize those accounts to better track the PPP. We did see quite a bit of ball dropping from big banks. I think that was a big theme, you know, whether it was,
I agree.
you know, I won't name any banks by name just out of respect for the other institutions, but certainly, you know, we were very nimble in the process, and we were able to get approvals for PPP loans at significantly faster speed than the larger banks were able to do. So there was, you know, once the word got out, you know, that we were, you know, I think we released, or we had a conversation with the South Florida Business Journal where they asked local banks, you know, if you were limiting it to clients and non-clients. As soon as we said that we were not going to turn away anybody who needed a loan, you know, it was open season. It was just a rush, and really that was a resounding theme was big banks dropping the ball, and can you help us since my bank's not responding to me? But a good question, Emilio.
Yeah, we can definitely vouch for that on our end, and I'm sure Carlos can as well. It is incredible how many of our clients that were banking with smaller community banks were able to get their loan, not only get it, several of the, like Jose's saying, of the accounts, of our accounts that went with the larger national banks, I mean, just didn't get the money, period. And some of them didn't even get it in the second round. A lot of our clients that did get the money up front in the first round, and even very quickly in the second round, were banking with community banks. So, in my opinion, that's something to consider for the long-term future when you decide who to bank with, for sure.
Yeah, I've seen also with other people that I know, a lot of the local banks that are, in our community giving a much more personalized and different kind of service. The big banks are difficult to track, process, status of loans, requests. They really were using automated underwriting. And I think it's, while it was probably crazy frustrating with all the floodgates, Jose, if you agree with me, at least it's an opportunity to continue to expand good local ties with everyone that came and applied for you.
It was, it was an opportunity, and it was an opportunity, not only to service the community and to help those businesses, because we were getting calls bordering desperation. I mean, and then then the flood of thank yous that come with that, which is obviously a gratifying part of doing what we do. But it did open the door to people understanding what the value is in banks that maybe aren't national, that are really more rooted in the community. And I think, like Jorge said, they're going to remember the bank that took care of them, and that did it efficiently. Just to give you an example, we shifted 75% of the resources of the bank to PPP for 6 weeks, basically put a lot of other things on pause. We do 600 loans in a 3-year period. We did 600 loans in 6 weeks, just to give you context to the kinds of volumes that we were seeing. And our position was, we're going to give a loan to anybody who needs one. That's the reality, because, at that point, there was a lot of, things about COVID that were not clear. And what was clear is that there was going to be damage, sustainable economic damage as an effect of the virus. So certainly we shifted our priorities there. And, we do expect that some of these relationships become relationships of the bank going forward.
Okay, did we lose, I think we lost Carlos Perez-Abreu, right?
Yeah, it seems like he might have dropped off here.
I know he had a hard stop because he had another function that he had to take care of.
Yeah,
So I haven't seen any other, if there are any questions from anybody that's listening in, we do have some prepared questions, which I might think we can kind of go to now. Carlos, insofar as, what are you thinking of the percentage of people currently from working from home, which has increased tremendously? Is this something that will probably continue statistically after the pandemic is over?
Well, was that for Carlos?
For you, George.
Okay, for George, all right.
Look, he's back.
We got Carlos back. All right. So I'm sorry, Emilio, was if we expect the trend of working from home to continue?
Mm-hmm. Yes.
Yeah, and I'll definitely let Mabel touch on this as well. I mean, look, I think at the end of the day, that's anybody's guess. We don't know what the future will look like, but I can tell you from conversations that we've had with clients, it will continue, and the question is to which degree and to what degree rather. I think you're going to have a lot of people who may say, a lot of companies who may say, our employees are working from home now. We're noticing that productivity is not necessarily going down. There's still a lot to be said for the workplace and ideas that are generated in group settings. But if we might see a trend towards maybe 1 day a week from home, or a certain department working from home for a week and then alternating cycles and things like that. I do think we're going to see a lot of changes in travel. I think when you think about the possibility that if you have to fly out to LA on business, you're talking about for a couple of days, that you're talking about a $2,000 to $3,000 trip, and now you can do it on Zoom for a grand total of $0. So, I think you'll see a lot of changes in that regard as well. And one of the things, and I'll let Mabel kind of expand on this, but one of the things that we've done is we've developed and provided a lot of our clients with work from home policies and work from home guidelines and things like that. So go ahead, Mabel, I'll let you take it from there.
Yeah, thanks. So the trend will stay there. And I think what I'm seeing with the clients that we service is, we had clients that the concept of working from home was a big no. Absolutely not. That's not our style. That's not the way we work. Productivity will go down, et cetera, et cetera. Now, even though businesses have reopened, a lot of the companies that we service are still allowing employees working from home, meaning they have not mandated the return to work. which already shows the different mentality just 3 months back. The other piece of it is a lot of the offices today, you know, everybody went into that whole Google mode of having open spaces, everybody together, united, take away the cubicles and the partitions. Guess what we're being required to do now, right? Wear the mask, wear the face shield, build partitions. The restaurants now have partitions. So a lot of the businesses are not equipped today to bring people back because their spaces are either open or their spaces are very tiny and they cannot provide the physical 6 feet or more distance. So a lot of factors are coming in that employers are not so quick and ready to bring people back anyway, even though they can, because they're looking at their spaces and they're trying to figure out, can we do that? And they've also seen that productivity actually is better. There's also a morale issue where maybe they thought prior to this, oh, it's not going to work. Employees feel more productive when they can somehow have flexibility and ownership of their time. At the end of the day, production is, the proof is in the pudding. So you're gonna know if the employee is producing or not, servicing or not, completing calls or not, whatever their job is. And so when they can do that, but feel that they're empowered to control their time, have flexibility, they're not sitting in a car for an hour and a half, going to work, coming back. So this has really opened up for allowing employers to think very differently about a building or an office going forward. So we do see that this work from home is going to become a lot more popular even after all this is said and done, which we still have long ways to go. So we do see that trend happening. I think there's a lot of positives in that.
And of course, it's very specific too, right? I mean, if you're a warehouse freight forwarder,
Right.
you've got people in the warehouse, you can't do work from home. So it's very industry specific.
Mm-hmm.
Yeah,
In the
well,
5 years I spent at Pepsi, they had conducted a study, and this was, years ago. Pepsi was one of the companies that got into the work from home thing way before it was anything popular. And their study found that employees who work from home work less hours, but they're actually more productive. So if those studies continue to come out, and obviously we'll see more and more of those as this continues, I do think, yeah, like Mabel said, we'll see that trend continue for sure.
Mm-hmm.
I also think that this kind of situation that we're going through right now, where so many people are working from home, has helped bring to a head or bring to the forefront the idea of doing it more. And we in the financial services industry have been preparing for like online teleconferencing, Zoom, etc. And it's generational. People who are our parents' age that are retiring, boomers, and then Xers, Gen Xers, are having a little more. We want to meet, and we want to, shake hands, look into each other's eyes, whatever it takes. Whereas the next generation, and the millennials and the upcoming generation prefer that flexibility, prefer an app, would rather look at their phone, and would rather use things like e-money and other platforms. So I know that from the financial services perspective, we're looking at that as the new frontier, and I think it's being accelerated by this.
Yeah.
If I could just turn for a second and go back, Carlos, since we had lost you for a second.
No.
I got a question here. It says, does PPP flexibility approved last night affect safe harbor and FTE calculations for the 60% payroll portion of forgiveness? Or is it just a shift from 75 to 60%?
Repeat that, the beginning part again.
Does PPP flexibility approved last night affect safe harbor and FTE calculations for the 60% payroll portion of forgiveness? Or is it just a shift from 75% to 60%?
As far as I know, it's the shift of the payroll costs are going to be allowed to be 60% and other non-payroll costs be 40%. I don't know that it affects, and again, it just came out yesterday, so I'm not sure how it will affect in the calculations, whether or not that has anything to do with if they're asking the question about payroll reduction, which is one of the where the safe harbor is in terms of payroll, that state, I believe, at 75%. I still think you cannot cut somebody's payroll by more than 25%, or you will get dinged on the dollar amount. And the full-time equivalent is still going to stand. If you have less employees now than you had during the certain periods, that is what I'm going to get into next, you will also get dinged. I believe this is just a pure function of how much your payroll costs need to be as part of your forgivable amount.
Okay, great. Thank you.
And I'll continue, I guess, from that standpoint, if that's okay to go to the PPP, which I think is what a lot of people were also expecting. In terms of the Senate bill yesterday, so they extended the weeks from 8 to 24 For those that already have the loan, though, it is at the election of the borrower to either to extend it to 24. It's not an automatic. So you're going to be able to still, if you think in your 8-week period you're done and you reach your goal and you're going to be 100% forgiven, you can go ahead and apply for forgiveness under the 8-week rule. Anyone that gets a new loan now will fall under the 24-week period, but anyone that already has it and has had it before this becomes law has to make an election to get into the 24-week period. If not, they can go ahead and apply at 8 weeks. So you're going to want to do those calculations. I don't think, and Jose, I don't know if you've gotten any forgiveness applications yet, but I'm not expecting any until after June 30th, because that was the deadline of the FTE reduction calculation, right? So they're going to look at your employees as of June 30th. So I don't anticipate any applications being submitted until July 1st or later. And I don't know, Jose, if you've seen anything yet or.
I agree. I think June 30th is really the date that has been, basically kind of delineated as the date that we're going to use. But I do agree, and I think you kind of echoed that is, if you have a loan that can be forgiven and you are not in the 24-week window, as soon as 8 weeks passes, we are advising our clients to go ahead and ask for the forgiveness immediately, because my understanding is that there's about a 150-day period that is going to take the SBA to process that, whatever the 1502, I think it's called, for the forgiveness. So we're advising them that if you know you're going to be forgiven and you meet the criteria, the new criteria established, through the bill last night, then to go ahead and do it right at the 8-week mark.
Okay. Am I still here? Yeah. Sorry, I'm not getting very good internet access, so hopefully I'm not breaking up too much.
We hear you good, Carl.
I'm going to go now and share what is obviously an obsolete application. Here on my screen, hopefully you can see it. This is basically the loan forgiveness application. Hold on. There. It has instructions here in the front, and we're going to go through an actual calculation in a minute. But basically, this is where you enter the compensation, the average FTE, and all the reductions to come up with your payroll costs. Again, this is going to change because of yesterday's law. I guess it's going to stay the same for those that want to stay in the 8 weeks, but it's going to change for most others. And this is what the bank will be receiving from the borrower and doing whatever due diligence they're going to be required to do to go ahead and then recommend to the SBA that the loan be forgiven, is I believe the process. Jose, is that what's going to happen basically in terms of receiving this forgiveness application? You guys doing what you think you need to do, and then from there on recommending forgiveness to the SBA?
Sorry, I had the mute button on. I apologize. Yes, that's the way we're going to do it, Carlos. I think that, as you look forward, by the time June 30 rolls around, there could be some changes to what actually may be forgiven in another manner. So for now, this is the way that we're rolling it out, and we've automated the application. So it's we can just link to the customers. They fill it out, send it back. We do the verifications and the checks that are necessary, and then we submit it electronically, directly to the SBA. We don't go through the SBA portal. We have software that connects directly with the SBA portal through an interface.
Okay, thanks. And then before we get into it, a couple of key definitions within that application is first of all the covered period, or what they're calling the alternative covered period. So initially, it was said that you were going to be able to use these payroll costs and non-payroll costs for the 8-week period, starting with the loan disbursement date, whenever you receive the loan. And there was obviously some pushback, being that you never really know that you're never going to get the loan on a payroll date, for example. So there were people saying that they weren't going to be able to fully utilize their payroll costs. So they came up with clarification and interim rulings about an alternative covered period, that you're allowed to do it and start for the first payroll period that begins after the day you received your loan. So for example, if you receive the example they give is if you receive your loan on Monday, April 20th, and the first day of the first pay period following the PPP loan disbursement is Sunday, April 26th, then we can go ahead, you can start your day on April 26th and push back your 8-week period to start 6 days later, and then obviously 6 days later. So that's something that you're going to want to consider depending on when you got your loan and also when your payroll periods are. The rule says that it's for anyone that has a more frequent payroll than biweekly, which would be 26 payrolls. So if you do weekly payroll, biweekly payroll, or any other combination that's more frequent then. Therefore, I think the way I read it, if you do a monthly payroll or even a semi-monthly payroll, you're not going to be able to choose an alternative covered period. That's how I'm understanding it. Anyway, payroll costs are going to be salary, bonuses. Some people were asking before this whole 24-week period came up as if they could maybe advance some bonuses to employees as a result of maybe being able to reach their thing. And the clarification says bonuses are allowed, commissions, hazard pay, health insurance, and the employer match for retirement. Something that I wasn't aware of until researching for this, if you're self-employed or you're a partner, a general partner in a partnership that contributes into a plan, those people, the self-employeds and the general partners, will not be allowed to use their retirement contributions as part of their payroll costs. It is strictly for employees and owner employees. So if you're an employee of a company, that does it. But if you're just a sole proprietor, Schedule C, or general partner, you're not going to be allowed to do, I don't believe, either the health insurance or the retirement plan contribution.
And Carlos, just since you brought up the bonuses real quick, that's a question that we've gotten a lot, and I have to put the disclaimer out there to verify this with your lawyer or your legal team. But when it comes to bonuses, everybody has to remember that there's still a good faith certification built into the PPP. So what they want to see if you're going to advance a bonus is that it's a bonus that's been paid historically, meaning, they might look back and say, wait a minute, all of a sudden this guy got a bonus and that's never been paid before. You're just paying that bonus to use the money. Again, anything under $2 million, probably not going to get looked at too heavily. But something to keep in mind that, again, there is a good faith certification in all of this. And when you're looking at bonuses, it should be something that's been paid historically. You can advance it. In other words, if you normally paid in September, you might want to, or in December, sorry, you might want to pay it now. But again, something that's been done historically.
Thanks, George. Non-payroll costs are rent and or mortgage interest payments on real and personal property, and utilities. Utilities here are defined as any payment for service for the distribution of electricity, gas, water, transportation, telephone, or internet access. Now, important to note on mortgage interest, rent, and utilities, it is for service that was already in place as of February 15th, 2020 and prior. You couldn't have just entered into a lease agreement on March 1st and that will not qualify. It has to be anything that was in effect prior to February 15th of 2020. And then the full-time equivalent is an average of 40 hours per week, and the calculation is done based on how many employees you have at the 40 per hour per week. If you have owner employees are not included in the count. So owner employees are not included in the full-time equivalent count when we get to the reduction calculation. And then they also included an administrative convenience for part-time employees. If you have part-time employees, you're going to be allowed to count all part-time employees as 0.5. You don't have to necessarily figure out if it's 0.25 or 0.3 and start adding all those points together. There's an administrative, compliance that I read in the interim ruling that says that you can choose, but you have to treat them all the same way when you make that decision for those that are under 40 hours. So those are the main, points of the thing. And then what I'm going to do is the AICPA has on its website a calculator for forgiveness, which again is going to change, and things have changed over time as everybody else's calculations have changed as we get better understanding of what's going on. I'm going to go through a calculation that has no reduction on the loan amount and then real quickly show what the full-time equivalent change does to that same scenario just by having a lesser number of employees at June 30th or December 31st. So I'm pulling up here now the schedule. Let me see if I can get this bigger. And you can see it's not the easiest of Excel spreadsheets. It's got many tabs, and I'm going to start from the back and work my way forward. So here we got all the questions where it's asking certain things about what your full-time, the average number of full-time equivalents on payroll employed by the borrower during the covered period or the alternative covered period. And then here we had four that were less than 100 and one that was over 100,000. The reason why that's key in terms of distinguishing the two is that when you go to the safe harbor, or you go to the dollar variance payroll, the way I'm understanding it is that you're allowed to reduce someone that was over that 100,000 by more than 25% possibly, and they will not come into the calculation of reducing your forgiveness. It's only for those employees that were paid less than or equal to 100,000. So this company here has 5 employees. The periods that you need to compare the two are basically the average number of full-time employees on payroll between February 15th, 2019 and June 30th, 2019, or the average number of full-time employees between January 1st and February 29th of 2020. So those are 2 calculations you're going to want to do because you're going to want to choose the more favorable of the two. If for some reason you were a smaller shop in 2019, you're going to have a lower number up here, and it's going to benefit you if you had a higher number here and you've had to reduce because of COVID. So it's either or, and you're allowed to pick which one is the one that benefits the company the most. And then here it's going to show you the reduction safe harbor calculation. You're going to see this one's easy because everyone is 5, right? So everything is 5. Then you're going to have to accumulate payroll for everybody. And what they're asking you to do here, I have 4 employees up here. They're asking you to put their 2020 Q1 payroll, first of all, and see what you paid them over the 13-week period that ended March 31st, 2020, to come up with an average annual salary. Make sure it's under the 100,000. And then they're going to say, how much did you pay them during that covered period or alternative covered period? And that you paid them for 8 weeks. And then this is where they start comparing on whether you reduced their payroll by more than the 25% number. Again, in this case, I left it pretty simple, so there is not going to be a reduction for payroll reduction. And honestly, I'm not going to show you in the other one this part because I couldn't get the formulas to work out. It's as simple as that. I think their formula is wrong, but this one stays pretty much the same, and it accumulates the payroll that you have under the covered period. Down below, you're going to see another calculation for those employees that are over 100,000. This is employee number 5, who got paid $18,500 over the covered period, but that'll extrapolate to more than $100,000 annual salary, and it's capped at $15,385 in terms of your forgiveness. And then last here is the owner employee that was made $25,000 during the covered period and is also capped at $15,385. And you're going to do your non-payroll tracker. Basically, it's saying how much rent you paid. Let's say there's a company that was leasing their offices and they had 2 monthly payments during the 8-week period of $5,000, and that they paid, phone and internet for utility payments. That gave them $14,500 there. Then this worksheet is the one that they put together to see if there is going to be a salary hourly wage reduction. Again, in this case, I didn't have any that were a salary or hourly wage reduction in terms of dollars. And then here is a schedule basically. And these are all, by the way, schedules that mirror the schedules that are attached to the loan application with the SBA. So you're going to want to have something like this to be able to then enter into the form that the banks do. I know the banks also, when they did the loan applications, provided their own payroll cost worksheets through Excel or through what have you, and you want filling it out. So I'm wondering, maybe the banks will also be putting this in their system somehow to calculate, or if they're just going to be getting the fill-in PDF version of the SBA. And Jose, I don't know if you've looked into this at all, and I don't know what IFB did in terms of their loan application, how you did the payroll cost calculation.
We did for the payroll calculation, we used Excel spreadsheet just because we felt it was the easiest. For the forgiveness piece and for these calculations, we're going with an automated solution that is fill-in PDF based. So it's a little bit different, but essentially it looks exactly like what you've kind of popped up on the screen.
Okay.
In addition to providing some very valuable information here, Carlos also just proved why you need a damn good CPA.
Hey, Carlos, is this spreadsheet proprietary or are you willing to share it?
I'll look on the AICPA website, but I mean, I don't think there's any reason why I can't share it. I don't think, but I'll double check.
I'll reach out to you
If
offline.
you're an AICPA member, you have access to it. I'll find out. I'll let you know.
Thank you.
Because I'm sure somebody's asking, people are asking for it already.
Mm-hmm.
So here you're going to see the compensation with 4 employees. Here's your maximum 100,000 for 1 employee, and then here's what you paid for health insurance and employer contributions to the plan, compensation to owners, and then here you go, 74,499.53 is the total that's going to carry to your forgiveness calculator. Down here, again, all this is being fed from my previous input screens. I didn't do any of this, where it calculates that you had 5 and you still have 5, so you're at 100% in terms of any reduction. You're not going to see anything. And then finally here, the summary is basically the payroll costs, the rent, the utility for a total eligible cost of 89,000. You don't have any reduction quotient whatsoever. You had 89,000 cost. Your PPP loan was 85,000. You met the payroll cost 75% requirement easily. Well, it had to be there, and then so 85,000, your full thing is going to be forgiven.
Which again, to keep in mind, that's 75% now. With the act last night, Carlos goes
It'll
down.
be 60%, correct.
So that'll be, I'm sure that'll be updated.
Right. So all that'll be updated. So that in a nutshell is what this thing is going to look like, and that application should look like that I showed earlier when it's all, filled out and said and done. And now the only change that I'm going to show on the next screen is basically the exact same idea. I didn't change any numbers other than the employees. Okay. And obviously it's hard to do without factual information, but I was trying my best to at least show what the calculation would do. And here what I did, same company that is up here, and we have the same people on payroll during the covered period is still 4 and 1, okay? But then we had 8 during the period in 2019, and we had 7 before this whole COVID thing, went about, started, right? So all of a sudden we have a lower employee count of full-time equivalents. Here you're gonna see the total borrowers average FTE between February, let's say we averaged 6, right? Between February 15th and April 26th, we're down to 5, but we average of 6 during that period. And then how many did we have in the period inclusive of February 15th? And we had 7 at the time. And then they're asking how many did you have as of June 30th? And I put the 5 that we're showing here for the forgiveness application. And that right there, I think, is the gist of it, because I believe if you get back to 7 or 8 by June 30th, you will be able to, hold on for a second, sorry.
Those are hot pockets you got to share with everybody.
It's my wine fridge telling me that the wine's at the wrong temperature. So,
Bring it here. I'll get it to the right temperature.
You end up here at 5. If you end up here at 7, which is probably your number that you need to get to, you will not get reduced. Okay. And then here, if we go back to this first tab, it basically says, as a result of that 5 versus 7, and I don't know what worksheet it is. Is it this one? No, I think it's just up here. Basically, it's the same situation, 89,000 in eligible costs, but then 71.43% of that is your full-time equivalent reduction amount. Okay, I mean, it's going to be reduced by the difference, right? You're only going to be qualified for 71% of the forgiveness of the 89,000. So then your modified total now of all your costs goes down to 63,000. You had a loan of 85, and you're going to have to pay back 21,000 to IFB. Okay, so I think that's basically the formula for that. Like I said, I could not get the salary and hourly wage reductions to work, but I think that it's basically if you lower the employee's payroll by more than 25%, and it has to be working the same number of hours. If their lowered amount is because of reduced hours, it will not count against you. If you're an hourly employee and just went from 40 hours a week to 30 hours a week, or 20 hours a week, but their hourly wage stayed the same, I believe that there will not be a reduction there either. It's really just the fact that you told somebody that they're getting a 30% cut because you're trying to make sure that the company survives the COVID. So I think at the end of the day, now under the 24-week period, I believe most companies should reach their 2.5 times payroll cost calculation that the SBA loan was reached at. Of course, that's given the fact that they're able to get back to work, get back to opening. We're seeing more things open, and that they're going to have this extended period to cover with their payroll and with their non-payroll costs. Even if they don't get to 100% capacity, let's say the restaurant business, the restaurant world, they will be paying rent, and that's probably the reason for the reduction of the payroll cost to 60%, because they're going to allow more other payments of utilities and rent to apply towards the forgiveness piece, because I guess they understood that there are businesses that are more impacted than others and are going to be able to still get forgiveness, but at the same time through a different formula between payroll and utility. So I think the biggest thing is going to be, salary reduction percentage or full-time equivalent. You just got to be very cognizant of your numbers that were in effect during that period in terms of 2019 or the beginning of 2020, and make sure that either by June 30th or whenever your 24-week period ends, you are at the same full-time equivalent. Because as you can see, you could have to pay back a big chunk of money if you haven't gotten back to those numbers. And that, in a nutshell, was where I was stopping.
Good. I'm getting a signal that maybe we should start wrapping it up, but I did want to ask one more question. Jose, what kind of materials are the lenders going to be expecting aside from this form that Carlos went through for the forgiveness request? Would they need like copies of leases, bills, statements, payroll, tax returns, earning reports? Or is it just the forgiveness form? What kind of things are you expecting?
The forgiveness form, and then I think that we're going to let our credit team, if something doesn't jive, do a little additional due diligence and maybe ask for additional information. I think we, much like the application process, I think the forgiveness process, a lot of it is going to really be handled on a case-by-case basis. Some clients we know them exceptionally well. We know their business. We know what makes sense. And then there's clients that came to us and we don't know who they are. So we may have to ask for a little additional information. And that's, I put it at the discretion of our credit team, who will be handling the forgiveness portion of the PPP loans. And they will, at their discretion, ask for whatever information they need to get comfortable.
Okay, great.
And maybe real quick, there's a question that came in. I don't know if maybe George and Mabel can also take a stab at it. The question comes about, because this came in before the presentation, and thanks for all those that sent in questions ahead of time, that if an employee is on a furloughed status, can they still be used in the FTE count as active for forgiveness rather than a terminated status? I don't know the answer to that question, but I would have to venture to say no. They're not a full-time equivalent. They're not working 40 hours per week. So I do not think that they would qualify and that they would be considered in the reduction part of it. And I don't know if there's a more legal term for that in terms of Mabel or George, but to me, if they're not working the 40 hours, they're not full-time equivalents. And if they're furloughed, as far as I'm concerned, I don't think they're working.
Right, they're not. Right.
Yeah, I would agree with that interpretation, Carlos, for sure.
Mm-hmm.
Oh, I just want to remind everybody that whatever materials might have been shared or used here, if it's able to be shared, they'd be on the Be Connected website. I don't know whether we have any further questions. Bravo, if we want to wrap this up.
Yes. Thank you. First of all, thank you to the panelists, Carlos, George, Jose. Thank you, Ms. Duran. I forget your first name. Sorry about that.
That's okay.
Emilio for pinch hitting there. Fantastic job. Yeah, as Emilio said, this is being recorded, so this will be on our YouTube channel, Belen Alumni YouTube channel, as well as Be Connected. If you can do me a favor and do as I'm speaking, maybe answer the survey for us to see how we did. I'd like to thank Crescencio Ruiz and Aldo Cardona for behind the scenes putting this together. Did a great job of getting these guys together, making sure that we were on point and ready to go. And like I said, also Lopez Varela behind the scenes, and Teresa Martinez for helping us with the live Facebook streaming. Emilio mentioned that the follow-up material will be posted on Be Connected, and any questions you have, you can actually send it to alumni at belenalumni.org or at alumni at belenjesuit.org, and that way we can get it there and transfer it over to these guys. So with that said, and I think we're good. And I want to thank you all again for joining, and did a great job. This has been phenomenal, a lot of information, and thank you guys.